Hey, good morning, everyone. Marty Mazora here, April 15th, 2022, with your weekly economic update. As usual, we'll take a quick look at our index score, a handful of the inputs. I'll offer up my thoughts along the way. In front of you is the index, which didn't move this last week. We still score at 12.7, and that is still, well, 12.7 points above what we would deem recessionary conditions. Clearly, growth is slowing, and that's showing up on balance throughout our 47 data points. So let's take a look at just a few of those. Retail sales in the U.S. still growing on a year-over-year basis, but slowing in terms of rate of growth. And as you can see, online retail sales have come off of their peak here a bit as well. So again, as I just mentioned, slowing rate of growth, but not contraction at this point when we look at things like retail sales. As for consumer confidence or consumer comfort, which of course bleeds through to retail sales, that actually picked up a bit here according to the University of Michigan. They were, in the latest survey, actually more optimistic about their go-forward prospects than they were here. Again, we're not looking at real high overall readings, historically speaking, but definitely improvement over the most recent reading. U.S. industrial production, again, still growing at a decent clip on a year-over-year basis, 0.9% on a month-on-month basis. But again, in terms of rate of change or rate of growth, a bit of a slowing here of late. The National Federation of Independent Businesses Small Business Optimism Index continues to roll over. Of course, inflation is a big issue there. 50% of the companies in the survey said they are passing increased costs onto their customers, and that's an increase from like 47% during the last reading. Hiring plans among small businesses did pick up just a titch. However, CapEx or capital expenditure plans rolling over here. So companies concerned to the point where they are not on balance interested in investing in expansion at this point. And that, of course, would be a concern economically, particularly when you consider that small businesses employ something like 2/3 of the American workforce. Capacity utilization continues to rise, and I see that as a good thing when we're talking 78% of capacity among America's factories. Of course, you get too high and it becomes inflationary, but right here, that scores as a positive in our index. The Bloomberg Commodities Index, wow, we have an amazing run in our commodities exposures, and I do believe that there is some real potential for some corrective action in here, despite the fact that we're long-term bullish. So we're doing some hedging in here. And then last but not least, I just want to talk about these market signals that I've been bringing up a lot lately, as implied when we look at different sectors relative to the broader market. In this case, U.S. staple stocks relative to the S&P 500. And this is year to date. So above 100 means that the security or the index in question is outperforming the benchmark. In this case, consumer staples have been noticeably outperforming the S&P 500 on a year-to-date basis. And what does that say? Well, consumer staples are the things that people have to purchase to survive. So they tend to be outperformers during tough economic periods. And I've shown you this lately, that some of the primary cyclical sectors are actually underperforming the S&P. So that says the underlying equity market in the US is implying a coming slowdown in the economy, or at a minimum is reflecting this slowing growth dynamic that I'm illustrating for you here. Another defensive sector, of course, would be utilities, right? People got to keep themselves warm and got to keep the lights on. So utilities have had an amazing outperformance so far this year relative to the S&P 500. And we actually twice now recently added to our utility exposures right in here. And then just this last week, we also added to healthcare. So we are expressing what we're seeing in this slowing growth dynamic. I'm not forecasting recession right here, but we are seeing better trends in the defensive sectors, both technically, and then we can make this fundamental argument. Staples among the three, and let me show you the other one, which is healthcare. Among the three, staples is still our biggest position. It's just that recently, over the last 2 or 3 weeks, we've added at the margin to utilities and to this, our healthcare exposure, which as you can see is also outperforming the S&P 500 on a year-to-date basis. When someone, let's say, gets sick or hurts themselves, as I'm sorry to say, a friend of mine who I play basketball with did yesterday evening and ended up straight in the emergency room to get, in this case, his nose straightened back out. Even if an individual is not feeling great about their financial prospects going forward, yeah, they're not going to buy the flat screen TV or the automobile, perhaps, but if they break their nose, they're going to go pay for some health care, no doubt about it. So my point there is that the defensive sectors, the market is bidding those up relative to the more cyclical sectors and relative to the overall market as a whole. So overall, a concerning picture, no doubt about it. One of slowing overall growth. Some places in the world more so than others, and there's some other places in the world that look pretty optimistic to us. And then under the surface, as it relates to the equity markets, with a tightening monetary policy going forward, with valuations where they are, and so forth, this is a potentially precarious setup for equities going forward. So we're having to diversify greatly. We want to own things that aren't typically directly correlated to equities. We want to be very diversified on a global basis. We want to be defensive with things like gold, and then hedge with derivatives to really mitigate against something really nasty to the downside. Not predicting that, but absolutely, we think the risk in this environment is there for something nasty to the downside. So folks, I will leave it there. Thank you, as always, for watching and listening. Be back soon. Have a great weekend, and happy Easter. Take care. Bye-bye.